Equillium Pharmaceuticals Inc. up 33% with latest news catalyst. Equillium announces itolizumab study achieves secondary endpoint. By the fly. Equillium and Biocon announced top-line results from the Phase 2 study evaluating itolizumab in the treatment of moderate to severe ulcerative colitis. The double-blinded, placebo and active-controlled Phase 2 clinical study evaluated the safety and efficacy of itolizumab in biologic-naive patients with moderate to severe active UC. A total of 90 patients were randomized 1:1:1 to receive itolizumab, placebo, or adalimumab every 2 weeks for an initial 12-week treatment period. The primary endpoint of the study was clinical remission as defined by total Mayo score, and secondary endpoints included the proportion of participants who achieved clinical response and endoscopic remission. The study was co-sponsored by Equillium and Biocon Limited, and conducted at multiple clinical trial sites in India. The design and conduct of the trial were a collaborative effort, with input from the gastroenterology community and leading global clinical and scientific experts in the field of inflammatory bowel disease. Baseline demographics of the study included a median age of 39 years, relatively equal proportions of male and female subjects evenly distributed among study arms, and a mean weight of 58 kilograms. Baseline disease severity of the study was greater in the itolizumab arm, where 23% of patients were classified as severe versus 0% in the placebo and adalimumab arms, and 66% had left-sided colitis versus 30% and 43% in the placebo and adalimumab arms, respectively. The primary endpoint of the study was clinical remission, defined as total Mayo score of 2 with no individual subscore greater than 1 at week 12. Secondary endpoints included the proportion of participants who achieved clinical response and endoscopic remission at week 12 and week 24. Additional data is expected to be presented at a future scientific conference during 2025. 23.3% clinical remission in the itolizumab arm at 12 weeks versus 20% in adalimumab versus 10% in placebo. 63.3% clinical response in the itolizumab arm at 12 weeks versus 60% in adalimumab versus 46.7% in placebo. 16.7% endoscopic remission in the itolizumab arm at 12 weeks versus 16.7% in adalimumab versus 6.7% in placebo. Itolizumab was generally well tolerated, and no safety signal was observed. Equillium Incorporated is a clinical-stage biotechnology company. It is engaged in developing novel therapeutics to treat severe autoimmune and inflammatory disorders with high unmet medical need. The company's pipeline consists of immunomodulatory assets and a product platform targeting immunoinflammatory pathways. Breakouts recap. An over 50% breakout in pre-market. Another 35% plus breakout in early market hours trading with wide-range volatility price action followed.
Please like the video and subscribe to Hot Stocks Replay. Thanks.
Transcode Therapeutics Inc. up 27% with latest news catalyst. Transcode Therapeutics completes Cohort 3 dosing in Phase 1 trial of TTX-MC138. By the fly. Transcode Therapeutics, RNAZ, announced that Cohort 3 of its Phase 1 clinical trial enrolled 3 patients, and all have been dosed with TTX-MC138, its lead candidate. TTX-MC138 is a first-in-class therapeutic candidate designed to inhibit the emergence and progression of many metastatic cancers. The Safety Review Committee monitoring the clinical trial unanimously approved opening of the third cohort based on its review of Cohort 1 and 2 safety and pharmacokinetic data, and is monitoring Cohort 3 as preliminary data becomes available. The dose administered to patients in the third cohort is approximately double the dose administered in the second cohort. No significant safety or dose-limiting toxicities have been reported in any of the trial's 9 patients. To date, the analyses suggest that TTX-MC138 demonstrates a PK/PD profile consistent with preclinical results and results from Transcode's previous Phase 0 clinical trial. TTX-MC138 activity increased with the escalated dose administered in Cohort 2, and was consistent at subsequent administrations, suggesting a favorable pharmacokinetic profile. Promising clinical developments drive by rating for Transcode Therapeutics. By tip ranks. Transcode Therapeutics, the healthcare sector company, was revisited by a Wall Street analyst today. Analyst Emily Bodnar from H.C. Wainwright maintained a buy rating on the stock and has a $20 price target. Emily Bodnar's rating is based on the promising developments observed in Transcode Therapeutics' ongoing clinical trials. The Phase 1 trial of TTX-MC138 has shown a rapid patient enrollment rate and, importantly, no significant safety issues have been reported so far. This is significant given the novel mechanism of action and target of the drug. The dosing in Cohort 3 has been completed with 3 patients at a dose that is double that of Cohort 2, and early data suggests potential therapeutic effects. Additionally, the drug has demonstrated a substantial inhibition effect on its target, miRNA-10B, even at low doses, which indicates its potency. The early results have shown increased activity in Cohort 2 compared to Cohort 1, pointing to a favorable pharmacokinetic profile. The company is actively evaluating the drug's effects on various metastatic solid tumors, with initial data anticipated in 2025. These promising clinical developments and the potential for dose expansion contribute to the buy rating recommendation. Breakouts recap. An over 55% breakout in pre-market, followed by 40% plus uptrend price action into market open.
Please like the video and subscribe to Hot Stocks Replay. Thanks.
Azitra Inc. up 27% with no news today and for latest news catalyst. Azitra sees 3.34 M shares at 27.85 C in registered direct offering. Buy the fly. Azitra, AZTR, entered into a securities purchase agreement with institutional investors to purchase 3,339,300 shares of common stock at an offering price of 27.85 C per share, in a registered direct offering. The gross proceeds for the offering are expected to be approximately $930,000. Azitra intends to use the net proceeds of this offering for working capital and general corporate purposes. Maxim Group is acting as sole placement agent in connection with the offering. Azitra announces pricing of $930,000 registered direct offering of common stock. By PR Newswire. Azitra Incorporated, a clinical-stage biopharmaceutical company focused on developing innovative therapies for precision dermatology, today announced that it has entered into a securities purchase agreement with certain institutional investors to purchase 3,339,300 shares of common stock at an offering price of $0.2785 per share, in a registered direct offering. The gross proceeds for the offering are expected to be approximately $930,000 before deducting placement agent fees and other offering expenses. This offering is expected to close on February 5, 2025, subject to customary closing conditions. Azitra intends to use the net proceeds of this offering for working capital and general corporate purposes. Azitra Incorporated is an early-stage clinical biopharmaceutical company. The company is focused on developing advanced therapies for precision dermatology using engineered proteins and topical live biotherapeutic products. It has built a proprietary platform that includes a microbial library comprised of approximately 1,500 unique bacterial strains that can be screened for therapeutic characteristics. The platform is augmented by artificial intelligence and machine learning technology that analyzes, predicts and helps screen its library of strains for drug-like molecules. The company's product ATR12 is a genetically modified strain of S. epidermidis for treating the orphan disease, Netherton syndrome, a chronic and fatal disease of the skin. Its product ATR04 is a genetically modified strain of S. epidermidis for treating the papulopustular rash. Its product ATR01 is a human filaggrin protein for treating ichthyosis vulgaris, a chronic, xerotic, abnormally dry, and scaly skin disease. Breakouts recap. An 35% breakout right out of market open.
Please like the video and subscribe to Hot Stocks Replay. Thanks.
Society Pass Incorporated up 16% with no news today and for latest news catalyst. Directors' bold moves with Society Pass stock. Buy tip ranks. Director Michael Paul J.R. Dunn has made significant transactions involving Society Pass stock, purchasing 12,000 shares valued at $347,040,000 and selling 10,714 shares for $314,524,041. Last week SOPA had an overall gain of 32.17%. The stock price moved from 1.15 to 1.52. Last week's high was 1.66. The low was 0.9310, and the cumulative volume was 14.24 m. Society Pass Incorporated is a data-driven, loyalty, fintech and e-commerce ecosystem company. Its segments include online grocery and food deliveries, digital marketing, online ticketing and reservation, telecommunications reseller, e-commerce, and merchant point of sale, POS. Online grocery and food deliveries segment operate an online food delivery service under the Handycart brand name and an online grocery delivery under the Pushcart brand name. Digital marketing segment operates the digital marketing business with creator and digital marketing platform. Online ticketing and reservations segment operates the sale of domestic and overseas air ticket and hotel reservations. Telecommunications reseller segment offers sales of local mobile phone plans and internet data provider plans. Its e-commerce operates an online lifestyle platform under the brand name of Leflair. Its merchant POS segment is involved in the sale of hardware and software to merchants. Breakouts recap. A breakout over 40% in early market hours.
Please like the video and subscribe to Hot Stocks Replay. Thanks.
Aurora Cannabis Inc. up 16% with latest news catalyst. Aurora Cannabis stock jumps on record-breaking Q3 earnings. By Benzinga. Canada-based global medical cannabis company Aurora Cannabis Inc., NASDAQ ACB, reported a third-quarter fiscal 2025 net revenue of 88.2 million Canadian dollars, compared to 64.4 million Canadian dollars a year ago. The 37% increase from the prior period was mainly due to 51% growth in the global medical cannabis business and 22% in the plant propagation business, slightly offset by lower quarterly revenue in the consumer cannabis business. Consolidated adjusted gross margin was 65% in the third quarter and 53% in the prior year quarter. Adjusted gross profit was 56.0 million Canadian dollars in the third quarter versus 33.6 million Canadian dollars in the prior year quarter, an increase of 67%. Also read, The Week in Cannabis, Trump's DEA pick, Tyson's reform push, Dutch coffee shop crisis and more. Medical cannabis net revenue was 68.1 million Canadian dollars, a 51% increase from the prior year quarter, driven by 23.1 million Canadian dollars was primarily due to higher sales to Australia, Germany, Poland and the UK, as well as increased revenue in Canada to insurance-covered and self-paying patients. The adjusted gross margin reached 74%, compared to 63% in the prior year quarter, through sustainable cost reductions, higher selling prices, and improved efficiency in production operations, including sourcing for Europe from Canada. Aurora's consumer cannabis net revenue was 9.9 million Canadian dollars, a 15% decrease compared to $11.6 million in the prior year quarter, mainly due to the decision to prioritize the supply of GMP-manufactured products to high-margin global medical cannabis business rather than the consumer business, which offers lower margins. Plant propagation net revenue contributed $8.9 million, a 22% increase compared to $7.3 million a year ago, due to organic growth and expanded product offerings arising from increased capacity. Adjusted EBITDA increased 316% to $23.1 million Canadian dollars compared to $5.5 million Canadian dollars a year ago. This quarter was record-breaking for Aurora, driven by all-time highs in global medical net revenue, net income, adjusted EBITDA, and free cash flow, said Miguel Martin, Executive Chairman and CEO for Aurora Cannabis. Aurora Cannabis achieves record third-quarter revenue and income. By tip ranks. Aurora Cannabis reported its fiscal 2025 third-quarter results with a total net revenue of $88.2 million, marking a 37% increase year-over-year, primarily driven by a 51% rise in its global medical cannabis sector. The company achieved record net income of $31.2 million and adjusted EBITDA of $23.1 million, both experiencing substantial growth. Aurora also generated positive free cash flow of $27.4 million, maintaining a strong balance sheet with $180 million in cash and a debt-free cannabis business. These results underscore Aurora's leadership in the global cannabis industry, supported by international revenue growth and expansion in its plant propagation segment. Breakouts recap. Steady uptrend movement of over 25% out of market open.
Please like the video and subscribe to Hot Stocks Replay. Thanks.